Hello, everybody. My name is Arun Lakhiani. I'm a partner at Untitled Chapter. Before we start, I'd just like to know if everybody can hear me clearly. All right. All right, great. So no technical issues, so let's get started. Also, would like to know if any of you have any experience in Fibonacci, using Fibonacci in trading. Okay, so I have 1, 2, 3. Okay, so there are quite a few people who are currently using Fibonacci in their trading style. All right, great. Before I get started, I mean, the first part of this webinar is a little bit about the history of Fibonacci and why it's so important and why people use it so much. Well, Fibonacci, a lot of people are aware that Fibonacci was invented by an Italian mathematician named Leonardo in, I think, the 12th century. But I would like to also say that it was also used or invented much earlier than that by an Indian mathematician called Virahunka. A lot of people don't know about this, but yeah, that is true. And the Italian mathematician Leonardo did market it very well, I would say, because he is considered to be the father of Fibonacci, although it was invented much earlier, about 600 years earlier than him. So, I mean, if I take this forward, a lot of people would be wondering why Fibonacci is used so widely, and especially in forex and stocks and commodities. First thing is that Fibonacci numbers, the sequence presents itself in every part of nature, be it the plant life or animal kingdom. I can give you a few examples of it being presented in nature. For example, like the primrose, the flowers, the number of petals each flower has, they are all based on Fibonacci sequence. For all the people that don't know what Fibonacci sequence is, I'll just type or give you a basic Fibonacci sequence before I get started. So someone asked me if I could type his name. It's All right, so before, so can everybody see what I'm writing over here? So here we go. It got deleted. So basically the Fibonacci sequence works like this. So 1 plus 1 is equal to 2. And then you go 2 plus, you basically add the number that's left to the present number. So 2 plus 1 is equal to 3. And then 3 plus 2 is equal to 5. And it just keeps going on and on and on. So basically, why this is so important is that in technical analysis, the Fibonacci numbers, there's something known as the golden ratio. So basically, if you divide any number in the Fibonacci sequence by the number previous to it, you get the golden ratio basically. So the golden ratio is actually 1.618. So if I were to continue the sequence, and 5 plus 3 is equal to 8, 8 plus 5 is equal to 13, 13 plus 8 is equal to 21, and you continue further, and you divide, say, 21 divided by 13, you'll get 1.618. So, and it works with each and every number. That's why this golden ratio is so important in technical analysis, because basically what we see is that there's a lot of action that actually occurs at these levels at 0.618 or 1.618. 0.618 is the exact inverse or the exact opposite of 1.618. And just a little bit of trivia before we get started with actual technical analysis and using Fibonacci. If you actually sum 10 consecutive Fibonacci numbers, it always results in a number that's divisible by 11. I know this doesn't have anything to do with forex or technical analysis, but it's really interesting that a person almost over 1,000 years ago or 800 years ago was able to come up with this sequence of numbers, and it being so important, Leonardo did not really understand the importance of it. It only actually occurred much later, in the 16th and 17th century, where other mathematicians realized the importance of Fibonacci numbers. Leonardo himself did use it, but not extensively. The importance came much, much later. And of course, the importance now in Forex is immense. And, if someone can actually use Fibonacci in your style of trading, you should be able to make a lot of money pretty easily. It shouldn't be too difficult. Another thing that's really interesting, another trivia is basically if you multiply any fib number in a sequence by 2, and you deduct the next number in sequence by the sum of the number that you multiplied by 2, you will always get the number that's before it, before the original number. So, for example, if I'm using, in the sequence, so the sequence is 1, 1, 3, 5, 8, 13. So if I take 8 and multiply that by 2, I get 16, and minus 13 from 16, you get 3. So that's the number that's before the sequence before 8. So this works at all numbers in a sequence. So again, this doesn't have anything to do with Forex, but it's just very interesting to know that it just works like clockwork, with every sequence, every number in the sequence of Fibonacci. Yeah, it is exactly magic. It's magic. All right, so there are two things that you should know in Fibonacci. One is retracements, and the other one is extension or expansion. Extension and expansion basically means the same thing. Of course, it's very important to know the direction of movement or the direction of your currency pair that you're using. So if you don't know the direction, then there's no point really in using Fibonacci. So the first thing that you really need to know is where the currency is actually moving. So I'm going to take the first example in my chart, which is Australian dollar, US dollar. Everybody knows that it's been running in a downtrend for about almost, maybe about 8 months now, I'm guessing. So what I've done is I've already drawn the Fibonacci retracement level, but I'm going to delete this and redraw it for you. So just right-clicking and deleting it, and it's fairly simple. Just go to Insert, go to Fibonacci, and take a retracement. Just click on retracement, and basically look at the top of your currency. But basically, you have to find a top, and you have to find a bottom. Now, a lot of people ask me, how do you find the top? How do you find the bottom? It's fairly simple. You take before it actually starts its downtrend, you need to take the top of that particular start of its downtrend. So it's fairly clear in Australian dollar, US dollar, this is where it actually started. Okay, so I'm going to left click and hold it and continue moving down and take it exactly to its lowest level. That's just above 8640. Just to be clear, or just to make sure, it should not have gone lower than this particular level, or it should not have gone higher than this particular level at the top. So we're pretty clear. I'll just tweak it around a little bit just to make sure that I've got the exact entry level and the exact Fibonacci entry. So it looks pretty clear to me, and this looks pretty clear to me as well. All right, so now does everybody know what retracement is before I start with retracements? Okay. So in a retracement, if you're looking at a downtrend, you're looking to enter a sell, to actually enter a sell. And you need to know where your entry points are. So you're not looking to buy this pair at any point in time if you're using retracements. You're looking at joining or riding the wave of the downtrend and actually figuring out the entry point using Fibonacci sequence. So if I see over here at the top, this is your 100% and this is your 0%. Now, the numbers that coincide between 100 and 0 are 23.6, 38.2, 50 is actually not considered a Fibonacci sequence, but it's actually there as default in MT4. It is also used, it is important because a lot of traders do, since it comes as a default, a lot of traders do follow 50% as well. But it's actually considered not to be a Fibonacci level to look into. So and the most important is, of course, 61.8. Now, what would happen if currently Australian dollar breaks on the top side, if it breaks 61.8? That's 9331. What would happen if it breaks on a daily chart? Does anybody know the answer to this? Okay, I don't see any responses. I'll wait for a few seconds more if anybody is willing to respond. All right. Right, correct. So basically, if it breaks 61.8, yes, it's expected to go all the way back to 100%. So this is the most important area of considering where it's going to reverse or not. So we're looking at a huge, this is about 600 pips. So you have to be really careful using Fibonacci, and you should be able to use pinpoint your exact entry points. Now, there are times where, a price action would touch a particular Fibonacci number and then come back down or go back up, or it ranges in that particular area for a couple of days or a couple of weeks also. But it's important that you actually enter a trade on first touch. So, for example, I'll explain what first touch is. Now, for example, if this is you have confirmed this is the lowest point in Australian dollar, US dollar, your first touch from here at 23.6 would be at this level. Can everybody see this particular green candle over here? So generally at 23.6, it's supposed to come back down. You're supposed to take a sell over here, but as soon as it breaks, it's expected to go back to its next level, right? Now, the first time it actually broke this particular level, it's going to reach 38.2. Now, at 38.2, you could place a sell order and hold it to within this range, all right? Now, if it does break this level, I wouldn't expect you to take a sell at this second touch. So the first touch is at this point. And if you take a sell over here, you'd be able to close out your position somewhere around at these levels at 23.6. It's expected to go lower than this if the trend is still intact, but it's not confirmed anymore because it's trading in this range right now. Right, so I drew this fib. Yes, before the price reached this point, I didn't even look at this particular level. Correct, right. So I can show it to you again. I actually just took this particular point and drew it at the bottom. And this is what the Fibonacci sequence gave me in return. Point of time, but once it did, so for example, I'll delete this again, and I'm going to draw this again. All right. So I'm not looking at what current price action is doing currently. I'm just taking this particular level, and that's all I've done. And if the price did not reach 38.2 or 23.6 when it actually touched this particular level. So for example, if I did not see the price action for the last 10 or 15 days, and this is my low at this particular point at 0. All this to my right hadn't occurred. So this is all future tense for me. Correct, that's right. It doesn't take account time. So, currently, if you draw your fib levels at top and bottom, all you need to do is place your cells at each fib level. And if it breaks, you need to close it. So the next fib level is 38.2, and this has hit about 4 times or 3 times. So the first time it actually takes would be the easiest trade to enter because, at first touch is where all the banks are actually entering their cells as well. So if you're looking to enter at the second or third touch, it'll be harder for you to actually make money in these because there's an opportunity or there's a chance for price action for this currency pair to move higher and break 38.2 and go back to 50. So, the easiest trade would be entering a sell at 23.6 or 38.2. Now, if this particular price action in the next couple of days breaks 38.2 and goes back to 50, you'd look at selling at 50 and hopefully, it goes back down to 38.2 or 23.6 or even back to zero. The thing is, it's important. I've always mentioned in my webinars before, I've always, mentioned to other traders as well. It's not wise to just use one technical, just one, indicator. It's always good to use one, or at least two or three, not more than three, but, Fib would be, on top of my list as a technical indicator because it's fairly accurate and it's accurate to, within 5 to 10, a range of 5 to 10 pips. Sometimes it's even 1 or 2 pips. So, your stop losses are pretty tight and your take profits are large. So you're looking at your take profits being anywhere between, 100 to 200 pips and your stop losses being in the range of, 20 or 25 pips at max. So, fibs are pretty accurate. This is one currency I've been looking at for the last couple of months. I've taken many sells in Australian dollar. I've been able to close out a couple hundred pips in Australian dollar, US dollar, quite a few times just using Fibonacci. But, the thing is, ascertaining where the lowest level has been does take time because, if this particular level was the lowest level and it broke again the next day, maybe 50 pips lower, you'd have to redraw your fib levels all over again. And then, again, you have to place your entries and exits as well accordingly. So, these lines do change, as and when a new low has been, created or, of course, when a new high has been created, but that's a long shot. That's whole. So MRC is asking me, when do you need to redraw? So you need to redraw once a new low has been created, in a retracement. If a new high has been created, then retracements don't work anymore. You'll have to use expansion or extensions. So in the current scenario with Australian dollar, US dollar, if you need, the only points where you need to redraw is if there's a clear break of 100%, that's 9755, or if there's a clear break of 8652. Did I draw in December? I just do it just now, so I haven't looked at it. It's October, somewhere in October, and my low was created in Jan, yes, mid-Jan, or, third week of Jan. Are we clear? So just to make sure everybody's clear, you're not looking at buys and retracements. It is risky to take buys in a retracement. If you're seeing a lot of price action and strong price action and you feel that, prices may move to the next fib level, then yes, you could use, retracements as an indicator to actually buy, but I would actually not advise it. I've been asked, you only trade 4-hour charts. Generally, actually, I trade 1-day charts. For Fibonacci, I've actually turned it down 1 notch to 4 hours. Because there's much more price action that can be seen in 4 hours. Now, if I change this to daily, of course, it is a little bit more accurate. But using 4 hours, I can show this to you. I can show you 4 hours as well. I don't use Fibonacci alone. I also use moving averages. So my moving averages are based on daily. And of course, my Fibonacci levels stay the same. So the thing is, it won't really matter to you if you're using daily or 4 hours on fib levels because your fib levels will always stay the same. There's no time constraint or time really doesn't really play or have an effect in Fibonacci levels. So you could use daily, you could use weekly, you could use even monthly. But of course, the number of if you're using a monthly chart, the number of trades that you probably enter will be maybe 1 a month or 1 in 2 months. If you're using 4 hours, there's a high chance where you'll be able to enter a trade if it hits a particular fib level maybe once a week. And you could easily book your profits within, 4 hours every maybe, couple of days. We clear? Well, I try to stay out of it. I tried doing another one on this particular currency pair just before we started it. It's just very confusing. You don't know, if I were to draw another pair of fib levels on this particular chart, it just makes it much more confusing. The thing is, with technical indicators and your style or strategies that you're using, keeping it simple, works. The thing is, there's so many indicators out there and there's so many different strategies out there. Sticking to one or two is best. Keeping it as simple as possible would make your work much easier. So, I would not advise drawing more than, one fib on a chart or even, I just stick to one and maybe use my moving average or, maybe a stochastic. But, that's it. I wouldn't use much more than that. The chart tells you a lot. Even if you're not even using any indicator, just your price action just tells you a lot. Fib is just an added advantage to a trader, and it pinpoints an entry and pinpoints an exit. So, for example, if I were to enter a trade and price actions, or if I see a bullish engulfing candle and I'd like to enter a buy trade, I'd double check with Fibonacci before I enter any particular trade. I'm not generally technical advisors or fund managers are definitely not scalpers. So we're not looking at, booking 30 or 40 or 50 pips. We're looking at a minimum of 100. So using Fibonacci or moving averages on a daily chart or 4-hour charts is where you'll be able to pick up these number of pips. Which is the best time to draw a fib? There's no particular time. Are you asking for, a time in a 24-hour period, or you're asking for a time? It's most important to ascertain which direction is your currency pair going. If it's going north or if it's going south. If it's going south, how many weeks and months has it been going south for? And if there is a retracement, is the retracement large enough for it to actually touch a fib level so you can enter? So these are the questions that you need to answer yourself before you actually can draw a fib level or draw a fib on a chart. I would not advise drawing a fib for a 1-week period or a 3-day period. It doesn't make any sense. It'll probably just tell you to enter within a 30 pip range or a 40 pip range, and any particular news, or you need to look at the bigger picture. Looking at the small picture will not really get you anywhere based on your account size. You're looking to grow your account, and getting to understand the bigger picture is where your accounts will start growing in a stable rate. If I was asked by FX Boyki, do you use if it is in range and sideways? So if you look at the markets in the last 10-15 days, it has been ranging sideways. And yes, it's sure. This is just one. I've got 5 examples. I'm taking it really slow because I want to make sure everybody understands. But there's always a reason why a currency pair is trading in its range. It's probably trading within its fib range, or it's probably trading within its moving average, or I'll explain this. There's a particular example that I like to use with Euro USD, and why it's trading in the range of about 60 or 70 pips in the last 8 to 10 days. Of course, there's a lot of money to be made in range trading as well, but understanding where Euro USD is going to go in the next couple of days is important, and fib levels and looking at the bigger picture will tell you where it's going to go. All right, so I'm going to move to the next pair. I'm going to go to Euro GBP, and this is what I've been able to understand from Euro GBP. Now, I'm going to zoom out of this, and I'm going to show you a trend that's been running for, again, about 6 months, maybe 7 months. All right, so the top was this particular level here, so that's 8766, and it's currently trading at 0.8230. Right? Now, the low was here, and there was another low here. You probably would be asking, I should extend this down here, right? Well, right now, I was asked about Australian dollar, so I just shifted my chart to Australian dollar, US dollar. Now, it's currently trading at a range. So, my first touch has already it already occurred, and I already booked my profit in my first touch. So my first touch occurred over here. Or over here. One second, hold on. Let me just move this aside. Right, so the first touch actually occurred at this point. So this was your low. This was your first entry. This would have been a lost trade. And your second entry would have been here. And you would have closed at around here. So that's where, you would have entered and exited. So I'm waiting right now. So I'm waiting right now for Australian dollar to actually break on the lower side or even on the higher side. If it breaks on the higher side, I'm not looking to enter a buy. I'd probably look to enter a sell back at 50%. Clear? All right, no worries. Right, so Euro GBP. There was a reason why I switched this. Well, I took this at this particular level first, and then I switched it lower to this particular level because I remember this chart really well. On this particular day, the chart looked like this because to my right, all this hadn't occurred. So to me, this was the lowest level of Euro GBP, right? So I wasn't aware of it actually making a lower low over here. So my first entry was first touch here. And my exit was around here. I didn't get my 100, the range was roughly about 135 pips. I didn't get the whole 135 pips. I got 111. I wasn't able to, convert all of it. I was able to book about 60 to 70 pips on this particular trade because I did see a bullish engulfing candle right about here. I'll zoom in. So this was where I drew my Fibonacci low, and this was my first touch at this range. And as soon as I saw this candle over here, I was able to exit. All right. Now, this chart is all but different. So now we have a new low, and the numbers and the fib levels change. So I wasn't able to. It hasn't reached its 23.6 yet. It looked like it broke 23.6, and it did clear break, but it didn't reach the next level where I was able to place another sell. So it's been running in a downtrend for 6 months now, and there's no reason for me to believe otherwise that it's gonna reverse its trend as long as we're staying within the fib levels below 61.8. So I keep trying selling at this point, at this point, at this point, and at this point. And once it breaks this particular level, I delete all of this and redraw extension line. So, you've got 5 entry levels, 4 entry levels. And in each level, you have this whole range to play with. So you're looking at roughly about, 80 pips, another 75 between here and here, and another 75 between here and here. So I was asked by FX Boyki earlier if particular currency pair is trading within its range. Exits would be at its next exit. So if I were to take a sell at 23.6, I would look to hold it at 0. If I take a sell at 38.2, I'd look to exit at 23.6. Now again, I generally don't exit all of. If I take a couple mini lots on an account, I'm not looking at exiting my whole lot at this particular area. I want to keep a little bit for it to run or ride the wave longer. It's happened where I've not been able to book any profit on my second lot because I've had to actually place my stop loss at 0 and actually hit my stop loss. But, there's always an opportunity for it to run much further, and it could even make a new low below 0 as well. So you don't want to lose out such a big opportunity. So it's always good to close out, keep, a disciplined strategy in your trading. If you want to close at 50% at a particular fib level, hold the other 50% to the next fib level, you could, or cut 25% and cut another 25%. there are various strategies you could use, depending on what you're seeing at that particular moment. I cannot say, 100% you'll be able to book, between one fib level and another fib level and maybe the third fib level. But, at many points of time, as long as you're riding the wave and you're in the right direction, you're looking to book, a large number of pips. So, just a quick question to all of you, where would my next entry be? Looking at this particular price action, would it be somewhere here at 23.6? Fib is, I would say, if you were in my last webinar, I did mention moving averages. I like using moving averages as well, 50-day moving average on daily charts. So that paired with Fib are my two favorite strategies. I'm not looking at moving averages today because, this is a pretty extensive webinar on Fib, so I wouldn't have the time about explaining moving averages. I generally use simple moving averages paired with Fib levels. Yeah, 50-day moving average, that's right. Yeah, so I got an answer for the first Fib level will be 23.6. So that's where you place your first entry at 23.6. That's 82. Let's take it between 8290 and 8300. I would, generally keep a 10-pip range because many times it doesn't really touch or it comes very close to touching. Forex guys asking me, do you have to see a lot of zigzag movement first to draw a fib on a chart? No, it's fairly, when you want to draw a fib, it should be fairly simple and it should be very easy to see. If there's a lot of zigzag movement or there's a lot of range trading, it's probably within a larger range, a larger picture. So if you have to probably zoom out and probably draw a fib for maybe, a couple months. And if it's probably trading in a particular range of 50 to 70 pips, it's probably trading within its 23.6 or 38.2 or 38.2 to 50%. So, generally, if there is zigzag movement, you'll probably have to zoom out and look at a bigger picture and then draw your retracement levels. So it's not good to look at a smaller picture if you're looking at fib. All right. There is no particular best time. As long as we're trading within your lows and highs, the fib level stays the same. It doesn't change. Okay, so I was asked how can prices return to fib levels after a while in future. Now, if it's making a new particular high or a new low, and it's reaching its particular, if you were there in my last webinar, there are of course price ranges where historically it's been always provided as resistance or supported. And now in Euro USD, it's very clear that between last year it touched close to 1.39. So, that will probably provide a huge amount of resistance for 2014. So if you're saying that, if it went all the way back to 1.35 Euro USD, if it's going to go to 1.39, that's where the resistance will probably hold. And the reason being is that, price actions is actually holding it from moving further or moving below a particular level. Now, if I zoom out and show you a particular level, I'll be able to show you something pretty easily. Let's hold on and look at a particular level. Now, if you look at this particular level, even if I were to take out the fib levels and just look at this particular level, I know that there's a lot of resistance here because if you look in the past, there's resistance here. It happened once, twice, is within here 3 times, 4, 5, and if I go further, we look at this particular. It was a support previously. Now it's acting as resistance. So I know my 50% is actually very important. And my previous webinar was last month. No, I don't use 14.6. I use the default fib levels, that MT4 provides. I like to use it as simple as possible. If in extensions, I do use 50% and 261 or 361, but the defaults, I keep it the same. I try not to change anything as much as possible. This particular level would be, my number one, if I remember correctly, maybe in a couple of months from now, if it does reach this particular level again, I'd jump into the trade without even thinking twice, because I know this is going. Yes, it does. So 23.6 does mean a lot to me and to a lot of traders out there as well. If you look at the long trend of USD Japanese yen, and if you were to draw a fib using USD Japanese yen, 23.6 has been able to provide a lot of support for USD Japanese yen in the past. So, right now, maybe I have to redraw it for you again, but I don't think I've included USD Japanese yen as a retracement. So I'll show you USD Japanese yen as an extension of fib levels. So moving on to the next chart, which is Euro USD, and this is not retracement anymore. This is using extension or expansion Fibonacci. Yes, of course, many times. I was asked if I've ever drawn support and resistance without fibs. It's fairly easy. You just look at past levels and you look at places where there's huge amount of support, a huge amount of resistance, and just draw a line there. And, more often than not in the future, if it does reach that particular level where you've drawn, the same way, Pen on Fire asked me what makes banks choose which fibs to enter short. Well, it's fairly simple. You use every fib level from 23.6 to 61.8, including 50%. And if it breaks against you, you actually close your position. It's fairly simple. If your strategy is working best for you, you just keep at it. You won't have to change it again. Okay, let's move to Euro USD. There's some really big movement right now. It's actually breaking this particular point right now. This is really important, guys. It's been trading in a range, and I wanted to explain this range trading, why it was trading in this particular range for so long. So I'll delete this particular extension level, and I'll redraw it for you guys. So you go to Insert, Fibonacci, and go to Expansion. Take your lowest level and draw it to the top here. So it's important to use this and not this. So you're using this particular red dotted line to actually confirm your top, and you use this red dotted line to take it to the correction, the first correction, and automatically your fib levels show. So if you want, I can redraw this for you if you guys haven't understood. Are we good? Good. All right. So the first level that you see here that pops up is your 61.8, which is at this particular level. It's at 1.3691. Thank you. My middle name should be Fib. All right, maybe I'll change it on FX later. All right, so once it breaks this particular, when you want to enter a particular trade and it's moving in up north and you want to enter, well, the first thing that you should see is the retracement level and how much it's retracing. So this is one of the examples. I've got two more examples after this. This one is the most accurate out of the three. I'll show you exactly why. Now, for example, if you saw this move from here to here, and you won't be able to draw your fib extension levels because you don't know how low it's actually been, if the correction has actually occurred. So after the correction occurred over here, and this big candle, occurred, this is where you can actually draw your fib extension levels. Before this, these lines wouldn't even occur because I wouldn't know where to draw them, because I wouldn't be sure if this would be my lowest correction after it jumped to this particular level. It could have gone maybe somewhere around here, or it could have actually gone back to these levels again. So until and unless I've got this, I wouldn't be able to draw these lines. So once this has occurred, my 61.8 would not be of any use to me because, you're looking at a range of maybe 15 or 20 pips. There's no point. So you're looking at a break of 61.8. Okay, so just put my cursor over here. This is where we're looking at. As soon as it broke your 61.8, which is right about here, I'm using my 4-hour chart. So as soon as it breaks on a 4-hour chart, I'll zoom in. And this is where it occurred. So this is where you enter. And if you look at this particular level, this is your 100% fib from this level. A lot of people mistake fib levels of 100%, taking it from this particular level, from its low point. But that's not exactly correct. It's actually 100% from this particular point. So if I were to draw a 50%, my 50% would be exactly half of here. So let me take and calculate what my 100% is. It's about 207 or 208 pips. My 50% would be exactly 104 pips. My 50% would come over here. Yeah, I trade on 4-hour charts as well to actually pinpoint my entries and exits using fibs. But again, looking at the bigger picture is important, so I always double check with my daily charts as well. So FX Worky was asking me, is it good to use fib levels in range trading? It's pretty clear that this range is directly related to fib. So as soon as it broke here, it's been trading in this particular range. And if you look at this particular level, if it breaks 61.8, we're looking at a correction at least of up to here. No, I generally don't use lower time frames on fib, but maybe somewhere beginning of last year, I actually was using lower time frames on using fib, 1-hour charts. But I've burnt my fingers using 1-hour charts on fib. And when I zoom out and look at the bigger picture on 4-hour charts, it's much more clear. It's actually even more clear on a daily chart, but the number of entries and exits you get would be very, very scarce then. Okay, so if you have been using fib in your trades for long, what are the success rates of price movement hitting the fib levels in your experience? So what do you do in between? Okay, so let me answer the first question. Fib levels, well, I would say between 70 and 80%. And the balance of my 20% trades have been closed within a stop loss of 30 and 40 pips. So my success rate on 70 to 80% of my trades are between 100 and 150, sometimes even 200 pips. But my 20% of my losses are between 25 and 50 pips, or maybe even lower. So, even if you get a 50% ratio of success on fib, it's booking your profits are much larger than your losses. I've seen many traders who book profits. They book maybe 15 trades of profits, and then their 5 trades equal to all their 15 trades of profits. So, it doesn't really make any sense to anybody. So let me answer the next question. So what do you do in between every 4 hours? We run a company called Untitled Chapter, so it's not just Forex. We provide insurance. So we have a team. We look into, endowment plans and various other things that we do. So this is not the only thing that we do. We look into other financial aspects of investments as well. So do you use the fib alone or with other indicators? Yes, I do use fib with my moving averages as well. And also I do tend to draw, resistance and support levels on my own as well. So, I like to use or put in a little bit of my own effort rather than MT4 telling me where I need to place my entry levels and exit levels. But also another important thing I'd like to mention about Fibonacci is I've been reading a lot of articles about large banks and investment banks using computer algorithms to enter trades and exit trades. Now, these computer algorithms, I used to work for Goldman Sachs before this, but I had never seen any computer algorithms in Goldman. It was always manual. But that was a couple of years ago. But as of now, the articles that I've read recently saying that there's a lot of computers and a lot of software involved in entries and exits for clients. The purest or the easiest way to actually enter for a computer would be Fibonacci. It's pure and simple. So if you're in the direction of large banks, then you couldn't go wrong. It's impossible. So if you're looking at Goldman Sachs or JP Morgan losing money and they're not succeeding in forex, and I'm pretty sure a retail trader wouldn't be able to as well. So as long as you're in the same direction of large banks and it continues to be that way, you won't be able to lose in forex. Yes, of course, banks use fibs extensively, very closely, watch it very, very carefully. They use many other indicators as well, but of course, in Goldman Sachs or other investment banks, it's more of hedging positions rather than actually taking, proprietary trading on their own risk. It's more looking at what clients have taken and hedging their positions accordingly. So that's how banks actually work. All right. So, I was looking very closely at Euro USD and, well, they do use moving averages. They do use stochastics. They use a lot. But the thing is, there's always a team of traders, and no one trader can actually trade completely on his own. I know there've been articles and there've been cases where there's been a rogue trader in a couple of banks, losing a lot of money for a bank, but technically that's not supposed to happen. All right, so I'm saying, okay, we have to wrap up. So I'm going to make this really quick. I saw Euro USD looking at 100% fib. It didn't break. It actually occurred 1, 2, 3, 4 times. It didn't happen. It's looking to break on the downside. So if it breaks this, we're looking at a sell position. I'll have to redraw a retracement instead of continuing to use extension levels. But the reason why I was trading in this range is very clear, because it's trading between 61.8 and 100%. Same as USD Japanese yen, I do the same thing, but this has not been as accurate as Euro USD, purely because it broke its 61.8 after its correction, but it was not able to go all the way to 100%. It actually broke below and it tried to break again. So this would be not a great trade to enter on a long. So you'd have to, double check this one again. If you look at USD CAD, well, this was a huge move a couple of days ago in the range of, I think, 150 or 160 pips. So I drew my fib levels as 280 pips. So it's pretty big. And, it dropped about 100 pips lower. But its first fib level is way up at 61.88, which is, again, close to its top of last year and this year. So we're expecting it to go all the way to 1.225. If it succeeds in breaking 61.8, I'm going to have to zoom out and look at this on a daily chart or maybe even on a weekly chart. Let me zoom in. And 100% is way up there at 1.1322. But 61.8 I expect to be pretty resistive, so I'm not sure if it's actually going to break or not. So let's look at it. I've already entered buys for USD CAD yesterday, so I'm already in profit in that one. So these are the 5 pairs that I've taken as examples. It's fairly easy to draw your extension and retracement levels. Quickly, if there are any questions, I'd like to answer. I think we have to wrap up in a couple of minutes, so I'm open for questions for a few minutes only. Thanks, guys. Thanks a lot. Okay, I got one question. If I don't have time, Forex Guide, if you can just provide me with, or if you can just email me, I'll be able to answer your question by email then. Thank you, guys. Have a good day and happy trading.